Welcome. We're excited to present this course on virtual currency taxation, which really is a brave new world in the field of taxation and the field of finance. I think you're going to find this very interesting. I got involved with virtual currency a few years ago, pretty much by accident. I have a small informal newsletter that I send out to my clients, and someone suggested that we should do a little piece on Bitcoin. So I sat down that weekend and I did some research, and it was pretty interesting. And I found this website that listed tax preparers who were willing to do taxes for virtual currency clients. And I think there were 3 or 4 other people on it. And I thought, well, how hard can this be? So I put my name down. And the next day the phone rang. And I'm sure we've all had these conversations with new clients where we're sort of furiously Googling the words that they're saying so that we can try to sound intelligent. And it was that kind of conversation. And whew, I got through that. And the next day the phone rang again, and I had another one of those conversations where I was furiously Googling terms as they spoke. And at this point I began to realize that either I should get my name off the list or I should realize that I really had a tiger by the tail here, and I was either going to get eaten or I was going to learn to talk tiger. So that was the goal, was to learn to speak tiger. So my goal in the 3 parts of this course, there's a part 1, part 2, and part 3, is to teach you how to speak tiger also, so that your phone can ring and you can help these folks out. I think you're going to find this very interesting. I know that I have found it fascinating. What we're going to talk about today is what virtual currency actually is, what the blockchain is that makes virtual currency possible. I'm going to go over a little some of the history of these currencies and how the world is handling this. I'm going to call it an explosion of new ways of doing business. One of the things I think is important when we work with virtual currency clients is to be able to speak the language. They're not going to expect you to be virtual currency experts. They are going to expect you to at least understand what they're talking about. And part 1 is to try to make that happen. Every informed person needs to know about Bitcoin because it might be one of the world's most important developments. I think a lot of people in the financial industry would agree with this. Bitcoin and the blockchain that it's based on has the potential to change the world. We as tax preparers need to know about it because the odds are very good that your clients have virtual currency income and you don't know it. So first we're going to talk about the nature of virtual currency. What actually is virtual currency? Virtual currency started with the development of the blockchain. The blockchain is an attempt to answer a financial problem that humans have had really since money was created. How can we trust what happens in the world and online when it's so easy to falsify records? This is not a new problem. Today we talk about records being falsified, but it wasn't very long ago when the actual coins were falsified. You've probably noticed that the quarter and the dime have these serrated edges on it. Now, it's not so that blind people can tell one coin from another, which is what my husband thought. The actual reason that coins were serrated was because back in the day, not that long ago, coins were valued by their weight. And what people would do was sort of just clip little bits off of coins that you could hardly tell, little shavings. And then if you did that on enough coins, you had enough of these little shavings to create a whole new coin. And then obviously what you were doing is you were decreasing the value of the coins that you were clipping from. Well, the idea of the serrated edges was that someone could tell if that coin had been clipped. So it does seem like the more things change, the more they stay the same. Now this doesn't happen. People are not clipping quarters. People are modifying records. The point of the blockchain, the concept of the blockchain, was to lock in important data like who owned the coin first, who got it next, when did that next person get it, how much did they get. Basically lock in the records of what had happened with that currency forever, never to be tampered with. That's the concept of the blockchain. So the blockchain, and we're just talking software here, the blockchain is a software protocol that records who had this virtual currency first, where did it get transferred, when did it get transferred, and what value was transferred. You can see that with blockchain, things like bounce checks just don't happen, okay? Because the blockchain knows, is the money really there? Does this person really own it? So the blockchain, the idea of it is to give us a level of certainty and trust with a financial transaction that we've literally never had in the history of money. So what is a blockchain? I'm going to just read this slowly because this is what you have to start trying to get into your head. And this is not, by the way, this is not immediately obvious. If you're scratching your head thinking, this is just weird. Yes, this is weird. It's a completely different way of looking at money, and it takes a little time and a little working with before it starts to make sense. The blockchain is a distributed digital ledger. It's a public ledger that is used to record all the transactions across any computer that has ever worked with the blockchain so that the record cannot be altered without the alteration of all subsequent blocks and the collusion of the entire network. The point is that, this this is never going to happen. So the database stores records in what are called blocks, and each block contains a timestamp of what happened with that virtual currency, where it went, the exact moment, etc. Now, this is what a blockchain looks like in software land. So this obviously means nothing to you and me, and this is only a piece of a blockchain. A blockchain is a very long bit of data. So this is what it's going to look like. It's not meant to mean anything to you and me, thank God, because it doesn't. Now, people say, how can something like a blockchain have value because it doesn't exist? It's just a string of numbers. How can this possibly be worth anything? And then I like to pull out a dollar bill when I teach this class live, and I say, outside of the U.S. government telling you that this has value, what value does it have? I mean, you wouldn't even blow your nose on this thing because it's filthy. God knows how many people have touched it. It has no value whatsoever, and it should be shredded immediately. So virtual currency is the same. It has value because the users agree that it has value. It has no physical existence, but guess what? Neither does the money in your bank account. That money really exists only digitally. Banks and financial institutions understand that the blockchain technology has the potential to completely change the way they do business. I mean, if virtual currency based on the blockchain really took off, we might not even need banks. The computer would store your money. You don't need the bank to store your money. And if you don't think that's keeping some folks awake at night, so why should tax preparers be interested? Tax preparers are interested in virtual currency because there are tax transactions that come about from dealing with virtual currency, and there are enormous implications. No intrinsic value, but it can be created and donated like property. This is a little bit like, Superman, it's a bird, it's a plane, it's Superman. Virtual currency has a lot of different facets. In some ways it's property, but it's earned and spent like currency. It goes up and down in value relative to the US dollar like stock, right? This is one of the reasons people have a hard time wrapping their brains around virtual currency is it's so many different things. It's legal in some countries. It is legal in the United States. It's not U.S. currency. It's not fiat currency, as we call it. And it is illegal in other countries, and we'll talk a little bit about that. And it is even accepted as payment by a number of, I'll say, higher tech companies. I'm not sure I think of Overstock.com as higher tech, but certainly Microsoft, Intuit, PayPal accept virtual currency as payment for their services.